Right. What's up, everyone? Sorry for the small delay. I had some Wi-Fi issues. But I was able to fix them last minute. So let's get started. Just fixing my mic. All right, let's get into it, guys. Good evening. What's up, Scalp Filipino Hori? Night night. Good name. Yelena, what's up? Good to see you. Tim. Billy Buck, what's up, man? Been a while. Been a while, dude. And Wave. What's up, Wave? New in the group today. All right, let's get into it. I want to say before I start, these streams are going to be more focused on education and more beginner friendly uh, and signals, as already said, but more beginner friendly because I know I've just launched the statistic dashboard, and obviously I see a lot of questions about how to use it, and I know it looks a little bit more complex, and I'm just going to give a disclaimer. It is a little bit more complex. I would personally say it's not beginner friendly. A very solid foundation of TAs required. But still, I think there's a lot of value to be had there. So I just want to go more into how I use it and pretty much the basic concepts of it. In my Discord itself, I go deeper into the statistics and all. But this one, I just want to have weekly webinars, so to say, that if people have questions, you can just ask away, and I will go over the dashboard in a more beginner-friendly way, so to say. So with that said, let's get started in the TA and the dashboard. All right, so first of all, I want to say the dashboard, here it is in its full glory on the wrong page. This is the dashboard I'm using. This is my main page that I always look at on the daily time frame, and I'm going to get into this with some examples. But the dashboard I'm using in Confluence with TA. I do think it's possible, well, I know it's possible to have some purely statistically based trade setups. But personally, I like to use it in combination with my TA. So let's get into it. And actually, funnily enough, today is not a good day to have a live example of today, because actually today is a very improbable day, a low probability day, but those happen. But first of all, let's dive into it. So how I use it is that I always, let me actually do it like this. I'm going to go into my regular TA at first. Because I think I want to very much make the point that I use it in combination with my TA. So normal TA is important, right? So let's do some regular TA. All right. So what we've been looking at in the group is this high time frame point of control that is now being hit, right? That was already hit yesterday and now being hit again. And this is important resistance. We were looking at this yesterday, and all of us were saying that, well, this is very important resistance. So what we do know is that this is very important resistance. Besides that, we had this 0.5 hit right on the moment where we wanted it to get hit. And this is actually a play we've been looking at. Let me just take that just so we are talking about the same thing. Let me check. Those are statistics that we're going to go through. But just so we're talking about the same thing. Yeah, right. So what we were saying for a while is our main bullish until I see reason not to be. I still think the bull run is on, and my next high time target is 47K, where I expect retracement for the upside. And the reason why I was thinking that is if I just get everything off, it's simply because my high time frame idea is this high time frame range, right? We have this high time frame range where we had this perfect deviation of the bottom. So this range where we were in here for a long time, right, during the peak bull run consolidation, so to say. And we had this very nice deviation up this 1.3414 level, which I think is a really nice deviation level. Did not come up with that myself, but it works well. And after that, we had just this follow through up. And the reason why I was saying 47K is simply because that's the midline of that range, and that's obviously going to be a very important level. So that's why I was saying at this point, I expect where I expect retracement for the upside. So at the time that happened, what I was saying is there we go, our first high time frame target hit. Let's wait ETF news, but I would not be surprised to hover around here for a while, retrace to 38K, and then continue our trajectory to the moon. So my target was 38K, and the reason of 38K is mostly because, well, we had a lot of confluence there, but one of the main reasons was because it was a 0.75 here, and then we had some high time frame SR flip levels, and so on and so on. So this retracement did not come as a surprise, but we were still pretty bullish, right? High time frame bullish, but this retracement is something we were looking for. So let's get into it a little deeper with the high time frame bias laid out. What I like to do then is obviously a lot of you people will know, or a lot of you guys, that I love my mark structure. So I'm always marking out mark structure. Then we have this as the daily low and the daily high, daily low and daily high. And currently the daily time frame is retracing, in my opinion, so that allows us to grab a fib pool from here. And what this actually shows us is a very nice thing. And that is that the retracement so far has gone to the 382. And if any of you has been following me, then I always say that in between the 382 and the 618, more or less, like the 0.5 and the 382 are the most high probable levels for targets for retracement areas, right? And that's one of the reasons why this has confluence, this 38K level. Right now we went just to, we just front ran that 38K level, and I'll go into that a little bit more. But on doing so, we did something pretty bullish, right? So the daily time frame is still, in my opinion, bullish, and probably a lot of people will call this weekly market structure, and that's completely fine as long as you're looking at the same thing. But also for me, the weekly time frame is still bullish. The weekly time frame is still bullish. And the daily time frame is still bullish, and the 4-hour time frame even is still bullish because I considered it an SR flip. But again, I understand a lot of people will consider this a break. In my system, it doesn't work like that. It's a break on a little bit lower time frames. But for me, the fake SR flip like this is a really nice play that I often look at. So after that, we went back down, and when that happened, well, that's confirmed for us the retrace we were looking for after this ETF news event, you know, that now in hindsight, that very obvious sell the news event. And I see, let's not forget the magnets, that's true. Magnets are an important element of our trading. Trading view magnets, I will show you guys later on. But anyway, we retrace back then, and then we come more to where we are now. And then I want to get a little bit more in the statistics, because you don't come here for the TA. I just wanna go over a little bit more high time frame ideas, so you know that we're talking what we're talking about. But obviously, I want to spend time on statistics and how I use them for my trading. But just to wrap it up, is that we had this low time frame or high time frame range, in my opinion, this range low. What we were saying here at the bottom, if we do not get that move to 38K and we reclaim this, what I was saying is I would find that bullish and I would be looking to long retraces. And that is until the first major resistance, which in my opinion, we have just hit, as we have discussed, because we had that high time frame point of control right there, which is also 0.5 of this structure. So with now the general bias laid out, or the high time frame narrative, so to say, and we're currently stuck in between a high time frame point of control and a high volume node. And is it not true that we actually just had news? I'm saying like there's awfully little happening for the news. Or didn't we have the, there you go, that interest rate decision? Well, that's not doing much, classic, as it has been for a while. As it has been for a while. All right, but then let's go into it. Let's go into it. First of all, I'm going to explain how, or the concept that you need to know of P1, P2, because you can see here, there's P1, P2. and how I use it to find trades, to execute trades, to know if something is a scalp or a day trade or a swing trade and so on. First, you need to understand what is P1, P2. So if you look at P1, P2 here, well, first of all, these are hours in a day, right? You have 24 hours in a day, so hour 0 to hour 23. So this is midnight UTC. I'm in UTC right now. Midnight until 1 a.m., 1 a.m. until 2 a.m., and so on and so on. And basically what this is showing, consider this for now, daily high and daily low. I'm going to explain a little bit later what it actually is, but it's close enough. Daily high and daily low, right? Then you can see that 28.5% of the time, this hour 0, prints a daily high, and 0% of the time a daily low. And this is not true. It's not actually daily high, daily low, but just for the sake of argument, this is how to read the table, right? So it just shows which hour of the day or how many times it prints a daily pivot. That's what it stands for, pivot 1 and pivot 2. So what is P1 and what is P2? Well, let's assume we have here, well, let's not pick Sunday because Sunday is the most horrible day you can pick. Let's assume we have here Monday. And let's assume we have here the end of Monday. So this is daily open, and this is daily close. The way I look at the markets is as followed. How I started is that I wanted to know, is there certain times in the day where daily highs and daily lows are most often or most likely to be printed? And that's how I started gathering these statistics. But at some point, I found that there is a difference, or there is definitely a pattern to be found in when daily highs and daily lows are being printed, but it changes a lot. For example, you have oftentimes a daily low printed at the start of the day in an uptrend, right? And a daily high printed at the start of the day in a downtrend. And if you just take the data that you collect from daily highs and daily lows and spread it out over a large time frame, what you can see is that both of them will have like even amounts at hour 0 and even amounts at hour 1. It will be more or less even across hours, and that leaves you with a vague idea. You just know a pivot is going to happen in that hour, but you don't know it's going to be daily low and daily high. And to tackle that, I came up with the idea of P1, P2, and it's a little bit different way of looking at the markets. What it is basically, so you have two pivots in a day. Oh, I call it pivots, a little bit misleading, but it just means you have the highest point of the day and the lowest point of the day. So now with the benefit of hindsight, we have the highest point of the day, daily high, and we have the lowest point of the day, right here, daily low. Now, P1 is simply whichever pivot came first. So if the daily low was put in before the daily high, the P1 is the daily low. And the daily high is the P2. So if I put that in here, daily high is P2, daily low, P1. So I want to explain. The reason why I'm doing this is so I can make a more educated guess as to when certain important pivots in the day are being put in. And the reason, in my experience, this is powerful is because not only does it give you place, right? Because we all learn the place and time, the place where to look for trades. That's something, I mean, all the courses learn, I've seen it everywhere. But then if you also have the time, that's an extra factor of confluence, right? Because not only do you know the place, you also know the time. And knowing the time of the trade or the most probable time of the trade gives you a couple of edges. You might know that, even though something reaches the place you want to trade, but it's not at the right time, you might stay out. And the benefit that has is that it keeps you from entering a lot of losing trades. And we can go over some more examples of that. But that's the reason why I'm doing this, right? I'm trying to time my trades to see, well, is there higher probable moments in the day and in the week and within 4-hour candles, as I'm developing now, within 1-hour candles even, that there's a higher probability that a pivot is going to be put in. So that's the reason why I use P1 and P2, why I look at time, but also why I use P1 and P2, because it's more actionable, right? If I drag that out a little, and I have hours of video courses on this, by the way, so if you don't get something, I'm gonna release the a big part of the video course. So you guys can watch it and I explain it very thoroughly in there. But for example, if you look at this is like daily, just days, training days. Well, let's start from here. If you look at the days, and you can see that often P1, right? I just want to show you what P1 and P2 is, just so I have the concept clear. So this is daily low, which is P1. I'm just going to get the daily low out of here because it doesn't have to be the daily low. It's just P1 because it was put in before the daily high. Daily high, which is P2. Right? This one's put in first. This one is put in second. Oh, that's a really lousy 2. Then here, P1, P2, right? Daily low, daily high. So P1 is the daily low still. And like I said, it's because we're in uptrend now. But then here you can see my point, right? In this case, the high is the P1 and the low is the P2. So we have the P1 here and we have the P2 here. And you can see, so this was my point. Say if I would just gather statistics on daily highs and daily lows, this over time is going to add up, right? Because it's pretty much put in at the same time as it was here. But now instead of a daily low, it was a daily high. And you're going to see this switch around all the time. And over time, it's going to give you less actionable data because both the daily high and the low are pretty much put in at the same place. But if you look at it at P1 and P2, so first pivot of the day and second pivot of the day, it gives you a little bit more or a little bit more actionable insights to that. And we'll get into that deeper a little bit more. For now, I just want to make clear what P1 and P2 is. And then here, once again, it's P1 here and P2 all the way at the end of the day, at the last trading hour right here. And today, we actually have a very improbable day, as we will see later. Because we have P1 here, 11 a.m. It's very improbable, I'll tell you, 1.4% of the time that happens, and P2 here. So, if there's any questions about the concept of P1, P2, then let me know, because I'm going to move on now to the next part. But this is important. This is important information to understand. So let's stick with the daily time frame for now, because we can do the same on the weekly time frame, and I do the same on the weekly time frame, and on the 4-hour time frame, and on the 1-hour time frame. But for the sake of argument, I want to stick to the 1-hour time frame, or to the daily time frame with the 1-hour blocks, because it's easier, or at least less confusing to understand. So what we have here is just a list of how often P1 happens per hour. All right, so 28.5% of the time P1 is put in over at hour 0. So this is at the trading day open. So this is UTC 0 is always a trading day open, and I have it now in UTC. So 28.5% at hour 0, 11% at hour 1, 2%, 8.6% at hour 2, 4.1% at hour 3, and so on, and so on, and so on, right? For P2, it has the same data, only then right here. Now, this is calculated based on this date range. So as you can see here, I have data from the 21st of October 2021 until the 30th of January. Now, that's just what I have selected. I can go further back. I can go all the way to 2018, and then you can see these changes. And by the way, this is the same. This table is here in graph format, so in a Pareto style chart, where this orange line is the cumulative value of both of these together, right? So basically this orange line is saying which one has the highest likelihood of putting in a pivot, right? Either P1 or P2, a high or a low. So that orange line is actually very interesting. But I personally don't use 5 years of data. I just think it's too much. It's even more than 5 years of data. I just think it's too much. I prefer to look at the last 2 years, but obviously you're free in being as creative as you can. And you can see here, for example, that lately hour 2 has become way more popular to put in a high or low in this last 600 days compared to the last, 1400 days almost. With the side mark that it's not exactly for 1400 days because I have Saturday and Sunday deselected. What you can do, you could also, look at just this data for Mondays. So you can, for example, see that Monday is way more likely to put in P1 at hour 0. And this is the last 135 Mondays, right? In this date range, where it's 135 Mondays. So it is way more likely because we just had 28%, remember, but on Monday apparently it's happening 34.8% of the time. That's really a lot. That's really a lot. So what we know now is that apparently on Mondays it happens way more often that a P1 gets put in at the start of the trading day, which is the start of the trading week. And one of the things we know, and I'll tell you already, that there are certain coins that are extra powerful on the start of the trading week. And maybe I'll give them to you later, but there's some statistics that we know of in the dashboard that they are very powerful for certain coins, especially at the weekly open. But that's one part of the dashboard. So the other part is P1 change. The other part is P1 change. And this one is also very important. What the P1 change is doing is measuring how much, so this percentage is calculated on this date range, right? We're seeing in this date range how often P1 is put in at hour 0, right? In the first trading hour of the day. This show is based on this here, recent days. What I have here is basically I say, look for the last 100 days, how much P1 was put in hour 0 in this case, and then see what the difference was with this. So in the last 100 days, it happened 5.7% less than 28.2%. So in the last 100 days, that means it happened more or less, well, it's not a very difficult calculation, that's 22.5% chance, 22.5%. And the reason I have this in here is because I want to be aware of recent trend changes. So even if I put it to 50, you can see here that, for example, hour 2 has been happening a lot more lately. You have a 5.5% increase, a 5.6% increase in hour 2, 8.2% decrease in hour 0, and so on and so on. Right, and what this helps me, 8.2% increase here for hour 17 on P2. And what this helps me to do is to keep track of trend changes, right? Because the patterns just change, you know this, and this way we can keep on top of it. And somewhere where that's becoming very apparent, if we have the same logic, and this is where you start seeing, I think, the power of the dashboard, is if you look at the same on the weekly time frame. And I'm not going to go over everything. I don't want to overcomplicate things. It's definitely, you would get all of it after going through the tutorials, but I just want to give us the basic overview. But if you look at this weekly chart, which is the same data as we just saw, only then on the weekly time. So in this case, we have, okay, how often does Monday put in P1? How often does Tuesday put in P1? How often does Sunday put in P2? And so on and so on. What you can see is that, if you look at all the data the last 271 weeks, then Sunday puts in P2 25.1% of the time. But if we click it, or well, first of all, if we just look here, we can see actually in the last 50 weeks, so in the last year, this has been happening 12.8% less. If we then click on Sunday, what we can see is the progression of the Sunday of being P1 and P2. But obviously Sunday doesn't have a lot of P1s, say, well, 0, because that would mean, the weekly high and low would be put in on Sunday, and that's very improbable. And what you can see here is that this has just been plummeting, right? So this is indicating that at this point, 40% of the weeks was putting in Sunday as a P2, sorry, as a second pivot of the week. But at that point, it just started dropping and dropping and dropping and dropping and dropping and dropping and dropping. And now you can just see it's way less likely to put in a P2. And then you ask, well, why did that go? Well, this data also showed you that, there's 17.2% increase on Friday. And Friday has been becoming much more prominent. So if you ever see me say Friday's the new Sunday, this is why. And that's also why we often look for very important, weekly highs or weekly lows to be put in on Friday. In this case, that would be tomorrow. But with all that said now, I think there's enough information to actually look at a practical example. Let's look at a practical example. And oh yeah, by the way, this last P1 is just how many days has it been since this was P1. This one was actually 16 days. So you can see this one has been happening less. Let's look at a practical example. I made a post about this today, but I think this thing will clear it up. Right now, it is still, and we'll go into this price action a little later. But right now, I think you have enough information so I can kind of see or show you how we use it in Discord. And obviously, it's easy for me to show you everything in hindsight and from myself. So I show you a call from one of the guys in my Discord. Shout out to Nelson Lorenzo. And he made this following call that I just want to discuss with you. Because this was yesterday, so I think it's a good example because it's very recent. Let's see where his call is. It looks like I deleted the image. I'll show you the image. So let me just look it up. 3 seconds. All right. This was a really nice call. And it was actually 2 calls. He also had a call on dot, but I'll just show one just for the sake of it. Yeah, this call. I got it. And I see he's actually typing in the Discord now. So maybe he's seeing it. This call. So he said, took the short purely based on stats with Engine Coin. And I'm going to explain how this call came about by showing you the statistic we just talked about. Engine Coin, let me check. It was a short right here. So he took this short. Took this short right here. Well, let's put it like that. Target and target's not that important. I think his target was at low at this point, right here. Then he had a better entry. Right. Something like this was the call. I'm just trying to replicate the call. So he said yesterday in real time, as you see, took the short purely based on stats. Now, what the stats were showing at this time was that P1, we'll just go over it in real time. P1 here was on Tuesday at 1 a.m. and P2 was at 1 p.m. 2 p.m. Sorry, took it out 2 p.m. So 1 a.m. to 2 p.m. So if we go to the dashboard, what we can do is engine coin. So, there's different coins where you can do the same for 1 a.m. to 2 p.m. So what you can do is you can set here the current 1 a.m. and the current P1 and the current P2. So at this point in time, you can see that 1 a.m. has 12.1% chance of being P1 and 2 p.m. has 2.6% chance of being P1. The reason why I'm looking at P1 for both, even though this is P2, is because this can still become P2 if this happens, right? So right now, this is P1. Right now, this is P1, this is P2. But again, remember what I said. It is about the first trading or the first pivot and the second pivot of the day. So the daily high and daily low, whichever comes first. So imagine that we would go from here and take this out. Then this would become P1. And whatever this is here would become P2. And this would be nothing anymore because it would not be a high or a low of the day, right? Either one of them. So the reason why we're looking at P1, the chance of P1 for both of these is simply because we want to know which one has a higher likelihood of being P1. And here is where the real magic comes into play. Because what we can do, and don't pay attention to this, this is just for simulation purposes, because this is exactly how we had it yesterday. So yesterday it was here, say we were at the charts where Nelson Lorenzo was at the charts, where he took this short. Let me actually simulate that better. He was right here. Going further, 8 p.m. right there. So at that point in time in the charts, what you can do is you can actually delete a lot of probabilities, because what do you know? It's now 8 p.m. We have P1 at 1 a.m. and P2 at 2 p.m. That means that anything before 8 p.m., which is not already P1 or P2, so anything before 8 p.m., which is not already the high of the day or the low of the day, can no longer be the high or the low of the day. So it can no longer be P1 or P2. Just impossible. Like, how is this point ever going to be the highest point of the day or the lowest point of the day? It's already in between the highest point and the lowest point of the day. We're not going to go back in time and magically create a high there, right? Impossible. So what that means is that we can actually discard of all those points that were not P1 and P2 and that happened and that are already in the past for the day. And that's why you have time adjusted mode. So time adjusted, basically what it does, it scraps the possibility, the probabilities of the hours that cannot happen anymore, and it recalculates everything based on what is left. So what you can then see is that it recalculates everything that is left. And basically what it ends up with is that there is an 82.1% chance of our one holding as P1, and there's a 17.9% chance of our two becoming P1, right? So this is becoming P1, aka if we write that down, daily P1, 82.1%, 82.1% chance of staying P1. So the first pivot of the day, first daily pivot. Daily P2, let's see, 17.9% chance of becoming daily P1. So again, I'm just looking at the probabilities for P1 for now. So this one has an 82.1% chance of staying P1, like the first daily pivot. And this has a 17.9% chance of becoming daily P1. Because right now this is P2. Right now this is P1. This one, either stays P1 or gets taken out. This one either stays P2, becomes P1, or gets taken out. So there's an extra option here for the second pivot. That's always the case. We always say as a rule of thumb, P1 can never become P2. P2 can always can become P1. So that's why first we want to know, okay, how safe, that's pretty much what we're doing. How safe is this point right here? Well, we can see there's an 82.1% chance that this one is going to hold. So that's a very high chance, obviously, right? Like if you see 82.1% chance of something staying, then that's very good probabilities. A lot better is something you're probably not going to get. So then our next question comes. Our next question being, well, if we know this one is most likely going to hold, how likely is it for this one that it's going to stay the low for the day? So in other words, how likely is it to stay P2 for the day? And for that, we look at this part. So again, this is just time adjusted, which recalculates things based on what is left. But if we do that, we can see that this one has a 16.7% chance of being P2, and that's the current daily low. Right now, our 15.3% chance, 18.0% chance, 6.7, and 33.3. If I put that in a chart, which you understand, or can more easily understand on the chart. So Right here, it's slightly different calculations because the data range was a little different. So I used these, so 60.4% chance, 16.4% chance. Basically, what you're seeing there is this. So this is a simplified way of looking at it. This is the chance of being P2. Chance of being P2. Can I make this bigger? If any of this doesn't make sense, then stop me and ask a question. Chance of being P2. Now, obviously, anything before the current P2, I made a mistake. I had this one and this one switched up. So let me rectify that. There we go. Mistake solved or fixed. Anything before the current P2 can no longer become P2, right? It's already been, it's never going to be the second pivot of the day if it's not already. So this one can become P2. Right now we're in this hour of the day, so any of these can also no longer become P2. So what is left are these, and again, those are these. This one, this one, this one, this one, this one. And then what you can see, so let's reiterate, we've already established, right, this one is most likely to hold because we have an 82.1% chance of that high holding. So it's very likely to hold. And how likely is it that this one is going to hold as well, the daily low, right? So our assumption here is, okay, we're not going to take this out today. This one is safe, right? This one is safe. How likely are we to take this out? And then we can see, well, there's a 16.4% chance of this being the P2 for the day. Same goes for this one. Same goes for this one, more or less. Then this one, 14.3. And then there's a very high chance, 35% chance, that the last hour of the day is going to be the low. So all things considered, you can say, well, there's a much higher probability that the low is going to get taken out than that the low will stay. Okay, that the P2 will become, or that the P2 will taken out and that we will get a new P2. And in this case, P2 is the low of the day, so that means that we will get a new low for the day. And this is why Nelson Lorenzo took this short. Now, I always say you have to use TA with it. I mean, sometimes I don't. I actually take trades without doing any TA. But for example, you could have a point of interest, what you're looking for here. Say you have the, in between the golden pocket and 786, and you're looking to short that. Then if you come here and you see, all these things line up in terms of your timing, you would say, well, it looks very probable that we're going to go lower. So I'm going to take that trade when we come there. In this case, Nelson took this invalidation here. I don't know what his exact reasoning was for the trade, so I couldn't tell you, but that's how I always do it. That's how I always do it. I always look for a place where I want to trade, and when price comes there, I want to see the probabilities line up in my favor. I'm just looking if there's anything else. You could put this as an order block, right? So say you're looking at that as an order block. I'll make that red. There you go. You say, well, tapped into that, and you can see this one is safe. Probabilities to go lower are very high, so I will take that. And this is for the, sake of argument, I don't know if this is actually what he was looking for, but in the end, what happened is that indeed we took out that P2 at the end of the day. So at this point, P2 changes, right? It becomes this, but we're already at the end of the day. And in the end, it's put in really at the end of the day, right here. So I thought that was at least a cool example to show you, to make it a little bit clearer how those statistics are used. Now, let's use it differently. Let's use it differently. Oh yeah, and by the way, regarding the magnets, if you ever see me using magnets, this is why. The reason I'm using, if I put a magnet, this is why I usually put a magnet. If I see probabilities are lining up like this, so for a case in this situation, if I put a magnet here, that means I see the probabilities are higher to take out the low than it is to take out the high. or some sort of this combination, and therefore I put on a magnet. And actually, for some reason, the magnet seems to have magical powers. It works. The magnet just works. The magnet just works. Don't tell anyone I spilled the secret on the magnet. But another benefit you might have, or that I know there is, and using statistics, is, for example, say this is a hypothetical scenario, but it happens a lot in real time. But I just wanted to explain how often use it, and then I'm going to go back to where we are now, to the current price action. So you have two levels you're looking to short, this one and this one. Say at this point in time, you put in a high at 5 a.m. and you go to the chart here, and that time you would have time adjusted probabilities, but you see that it's a 3.2% chance and a 0.8% chance for respectively P1 and P2. So you're like, well, it is a level I'm looking to short, but the time does not make sense at the moment, so I'd rather stay out. That's how usually I do it. I just want to see the probabilities line up. It's my system. So in this case, I would stay out, and if I would enter, I would take profits aggressively, especially because I see, we have a 12 a.m. low, which is higher probability. So, well, in this case, eventually it get taken out, but for the sake of argument, in real time, all right, I'll probably stay out. It might be just a scalp, or it's probably just a scalp. Then when you go up and eventually you reach this point, which is this trade you're looking for, and that would be at a higher probability time, that is the time you would be looking to enter a trade, right? If I see the probabilities line up with my price level, that's when I want to enter a trade. In this case, I think there's also a low probability time, 7:45. Let's check that. Because again, these are probabilities, right? They're not always going to work. 4.2%, it's not a very high probability event at all. So that happens. Today that happened as well. You're going to have low probability events play out, but there's ways to spot them. There's ways to spot them, as we're finding out more and more. But in any case, you're not always, it's not always going to be the highest probability event, because obviously, even if you have a 70% chance of something happen, or an 80% chance of something happen, that means 1 out of 5 times it's still not going to happen. 60% chance, same thing. Well, not exactly the same thing. Obviously, it's going to happen 6 out of 10 times, and 4 out of 10 times it's not going to happen. So low probability events do happen, but as long as you follow the probabilities at the end of the day or the end of the month, you should be right more often than you are wrong. So with all that stuff out of the way, let's look at the current price action for a bit and just talk about that. Let me remove this, because stuff is happening. Now, what is happening now, I think, is very interesting. And the reason why that is interesting is because of where we came from. So that's an important SR flip. And last week we had weekly open here. Weekly close here. So the reason why I'm saying what's happening now is very interesting, because what happened last week is that until the last moment of the week, or sorry, I have this wrong. Weekly close already on Sunday. Until the last, well, on the Friday of this week, this was weekly P1. And this was weekly P2. And this, I'm going to be honest, this one actually caught me off guard because I was looking at something else. Weekly P2. And if you look just here on the weekly time frame, there we can see that, go back to Bitcoin. Well, it has been happening less 50 weeks, so I want to down it a little, but 54% of the time, Monday is P1, and then often, either Friday, well, definitely Friday, very, very often on Friday, we put in P2. So this one we had Monday P1, and then here P2. Now, at this point in time, when we had the SR flip here, I shorted this, right? I'm not gonna lie, I shorted that. Reason being is, well, I thought, well, P2 is probably going to get taken out. I missed two important things at this point. First of all, this is not the kind of pivot you want to see just from a, yeah, just a regular PA perspective. This kind of pivot is not something you want to see, right? Like it's way better if it's a liquidity grab. So what I prefer to have seen is this leading into it and then going down, right? That would have been a way better weekly high at this point. It's a very bad weekly high just from a price action perspective, and then you go down. And second, I love the fake SR flip. So you have this move where you seem to be flipping a level and then actually just reverse. This happens all the time. It's one of my favorite plays. But I was a little bit blinded by by some other things which happens, but it's good for the concept of where we are now because we learn, and we improve. So first of all, I wanted this to be a liquidity grab. That didn't happen, right? You want that. So in oppositeness, this was a massive liquidity grab, right? Massive liquidity grab. And that's also why I did say it this time, well, if we do go up here, I would find it very bullish because that would be a deviation of these lows, which are very important lows. And it would just be a very strong sign if we go below that and, actually consolidate it for a while, go back up, because that means market makes that a lot of time to actually fill their orders here and then go back up. And usually that results in a strong move. So that's why I said I'm looking to long retracements rather than look for shorts. Now, with that said, currently, and this is why I wanted to draw the context, we have the weekly P1 on Monday. Oh, that's weekly P2, sorry. And the weekly P1 on Monday and the weekly P2 on Tuesday. So that begs the question, which one's going to hold? Purely from a statistical standpoint, once again, we're looking at Monday. And Monday has not happened now 5 times in a row. 5 times in a row. That's really a lot for something with a 54.9% probability. And as we can see here, it's low, but historically speaking, you would say it's not going to go much lower than it is right now. You can just see it usually, this is kind of the lowest occurrence it will have. There seems to be some kind of seasonality to it. But we also know, and this is why I say it's interesting, that Tuesday has been happening a ton as P1, right? It's really been increasing. In the last 50 weeks, it's happening 33% of the time. And we can actually decrease this to see, look at the last 20 weeks and even the last 10 weeks. But you can see it's basically, I like to look at a little bit higher at 35 plus because it gives a better image of what is happening. But right now, for me, this is a conundrum because I'm going to look at a couple of things. Which one is liquidity run? Well, this one is liquidity run for sure. So I would consider this a good high, a good potential high. Well, let's call it liquidity run. Then the question is, what's the low a liquidity run? And the low was also a liquidity run, but on a lower time frame, right? Small liquidity run. So in this case, both this weekly P1 on Monday makes more sense than the last week did. So that's already something I have established. It's a better weekly low than this was a weekly high last week here. This is a better weekly low than this was a weekly high. So following probabilities, then I could simply look here at time adjusted. Well, it's not going to do much right now because we are only at Wednesday. But purely statistically speaking, there would be, I'm gonna remove this. If you look at let's look at the last 100 weeks, last 2 years. Don't want to go much lower because it will put the data too much. 52.4% chance of Monday being P1, 21.4% chance of Tuesday being P1. So 1 in 2, 1 in 5. And this one has been happening a lot already. And this one hasn't happened 5 times in a row. If we do simple mathematics, an event of 50% not happening, an event of 50% chance not happening 6 times in a row is 0.5, dot 0.5. 2 times this not happening in a row is a 25% chance. 3 times in a row is a 12.5% chance. 4 times in a row, 6% chance. 5 times in a row, 3% chance. So to not have it again is a 1.5% occurrence. A 1.5% occurrence that it will not happen again. In total, right? I'm not saying there's a 1.5% chance now that this will happen, but in total, just simple probability calculation would indicate there's a 1.5% occurrence where Monday does not put in P1 6 times in a row. So that would mean that in this case, this would get taken out. So how you could use that is if you're looking for a trade here, say you have this down move. Say you have this down move here, and you have a point of interest here, which obviously a big golden pocket is always going to be a point of interest of everyone, right? So say there's a thing you're looking at, and at this point you see, well, Monday is the low, Tuesday is the high, Monday is a good low, Tuesday is also a good high, but this one has not happened 5 times in a row, and even though it's 50% probability play, so let's hold that 55%. Well, let's cut out 50% probability chance of holding. 52.4. And the other one, 21.4% chance. Becoming P1. So this would mean from here on out, if this becomes P1, this would have to happen. Right? We need to take this out. So our use of statistics is just, if there is a retracement into a nice area, like here, you could even have it as a swing trade almost. But if there's a nice area of retracement when you're looking at, well, this is not the most likely P2 or P1, then you can, look for longs in that area. But in this case, I wanna tread caution because there's 2 things. First of all, today is a news day. News days are when unlikely events are most likely to happen. News days are when unlikely events are most likely to happen. So I'm personally always very careful. I usually don't even very much look at statistics, especially when this happened that we broke the high. We threw all the statistics out the window because just a very improbable day. So, just like with normal trading, you're not every day you're gonna have high probability or very high confluence setups, right? It's the same with statistics. You're not always gonna have very high probability setups in the statistics we are using. So with all this said, I did take myself a short here, which was risky. I think this was my entry, 2.6, which is risky because of that, obviously because we're at the news. But my reasoning was as follows. Tuesday is the new Monday, as we've been saying. You can just see how often Tuesday is being put in as a P1. So I have multiple things going for this short. First of all, we had this massive liquidity run. We had this massive liquidity run here, right? This is a very big liquidity area, and we have taken that out a couple of times. Plus, we have the high time frame point and control there, right? That we tap beautifully a couple of times. So after this tap, I entered. And what I see, this is how I use it. What I've been noticing in my statistics is that Tuesday has simply been happening more and more often. So what we say Tuesday is becoming the new Monday is what we mean is that Tuesday is way more likely to put in P1 for the week, at least lately, than Monday has been, right, for the last 2 months or so. So what that means is that I can enter short based on that premise. Man, I could have hedged myself. I didn't catch this long, but with the same reasoning on the statistics, I could have entered there. And then what I do here is simply I take profits early. Because my invalidation is very close, right? I can use this as an invalidation. This is my invalidation, literally 1 cent above it, $1 above it, one pip, as some would say. Because this trade idea of Tuesday being the weekly high, the weekly P1, gets invalidated as soon as this gets wicked, right? It doesn't need a close, it doesn't need anything, just a little wick, a very little wick, and then down. That's, or not even down, up, but just a very small wick is invalidation of this trade idea. Because what's my trade idea? My trade idea is, well, Tuesday is happening a lot more often lately. So my trade idea is, well, Tuesday is happening a lot more often as P1. I mean the weekly P1. So my trade idea is that if this is the weekly P1, then I can enter here and have my stop loss right above there. Because today is Wednesday. If we would have taken this just a little bit, what does that mean? That means that no longer is Tuesday P2, it's Wednesday is then P2. So Wednesday is then the weekly high. So Tuesday is never going to be the weekly high anymore. So that means that I have a very small invalidation. 0.68% is my stop loss, which is really good for a swing trade, in my opinion. It's 4%. And then I can target the weekly P2. Because I know that this is very low chance of being, Tuesday has a very low chance of being P2 this high. So if this is going to be a pivot for the week, then it's reasonable to assume that this one will get taken out. And now I've already taken profits. I no longer lose. And I can safely ride it to see if we can take out this weekly P1 and continue our trend. And this is why trends are so important, right? Where this is so important, where Tuesday is the new Monday. Where Tuesday is the new Monday. So then we come again with our magnet right here. I must admit that that trade there was a little bit more risky, but especially with the news. But I've also seen that the news has just gotten less and less volatility lately. 33544. I entered here. Yeah, this is where I entered. And proof. I'm a low left guy. You guys know that. This one is going nicely so far. So again, the premise of this short is that Tuesday is the new Monday, or well, Tuesday is the new P1 for the week, which means we would have to go all the way here. And I'll show you even, let's check. So this was yesterday. So this is just my theory explained in real time yesterday. So yesterday gisteren means yesterday in Dutch. This was 1719, so this was here. All right, so I was saying if we take this low, then it might be potential that high today, this high, has the potential to be the weekly high following the trend that Tuesdays are killing it. So that's basically what I've just been talking about. This was the high. And the reason for that being is where I said this, if we take out that, if we take the daily low, which at this point was, where was the daily low at that point? Here, here. Because 2 p.m. is usually a good time. I actually longed this. 2 p.m. is usually a pretty good time to put in the daily low or high, the P1, especially lately. You can see that here. Right, 6% chance, but it's been happening 5%, 5.5% more often lately, right? So you can see it more clearly here in this view. At 4 p.m., see, has been happening quite a bit. Look at the orange line, one of the highest occurrences, together with hour 16 actually. This is the recent days. And this is where you can see how it evolved. You can see it took off, right? It took off. And by the way, I have a lot more statistics I'm not covering. I think this is the most important statistics. Plus, I don't want to keep it too get it too complicated. But I love this chart myself, and I use these statistics to a lesser degree, except for that chart that I just showed you. I really like that chart. But the reason why I said this is that if we would take this low, which was at 2 p.m., that means that this can no longer be the low for the day, and that would mean that this is the high for the day, because you're not going to put in a low at one of these, another P1, right? You're not going to do this anymore. That would be very unlikely. So if this would get taken out, then you would know, well, this was the high for the day, and in the end, it happened at the end of the day. But if that would happen, then lower would be more likely. And considering that Tuesdays are killing it, then it has a good chance of being high. And the fact that it's a very high time frame level. Let me delete that. High time frame level. We had liquidity run. It checks all the boxes, right? It's just a very nice um, point of interest. So you combine statistics with TA in this way. Right? I always combine statistics with TA. I also have it sometimes where you go into the day, and for example, this is the low, it's at hour 0, and this is the high, and this high is low probability, this is high probability, but price is very contracted. and there's basically no volume and no price action, and this high was kind of made in the similar ways that weekly, then I'm going to be very cautious and I'm going to say, well, I don't think this actually has that high of a probability because the low just looks very terrible. It's not a good daily low. And I actually want to implement that into statistics as well. I have plans. I have a lot more plan. I'm going to add a lot more statistics into it. I'm actually building 4-hour statistics. So these are like it's still not formatted, but these are 4-hour candles. So you can do the same as what we were doing on the daily, but for 4-hour candles. Still need to tweak these. Obviously, you have multiple. These are 30-minute candles within a 4-hour candle. So we're going to be looking into that. So what you see here is that 53% of the time, the first 30-minute candle within a 4-hour candle puts in the first pivot of that 4-hour candle. So this is going to be good for scalping. It's going to be good for finding confluence, right? You can maybe find a good entry on the daily, and then you can go down on the 4-hour to find an even better entry, and so on and so on. So it's going to be very good for that. And then I'm going to add 1 hour as well. But for now, this is already a very nice short, I would say. And this is what I mean. I'll show you as well that not everything, I don't want to paint a picture that is always super clean and everything is just perfect, because it's not, it's probabilities. Like right now we have the daily low at 11 a.m. and the daily high at 5 p.m. Am I saying that correct? 11, 5. So you can see that both of these are very low probability for a P1, but well, we know that one of them is going to be it. But again, I state, it's what we're saying at the start of the day in our Discord. It's a news event day. Usually those are improbable days, volatility and stuff. So you want to be careful with statistics, because if low probability events are going to happen, usually it's on days like these. So when this happened, I'll show you momentum put it best. I'll show you how he said it. So this was when we broke this high here. Throw stats out of the window rest of the day, as expected. All right, this is what I said. This is what we're looking for. We said at the start of the day, well, gonna take the stats with a grain of salt because of the news event. That's usually how we do it. We're now at the golden pocket. So also I had to take profit here. And I think I have the rest open until here. See if it plays out. Let's see how Tuesday does. Let's see how Tuesday does. All right. Stop hooked. Good to have you here, buddy. This plays out and the current P2 becomes P1 between 2-6 my time. I'm going to possibly flip out. I don't know what time that is, but let's see. Because I would expect it to happen later in the week if it happens. It's Wednesday now, and we know that from statistics, it's more likely to happen on Friday. See, it's like almost 1 and 2 times it happens on Friday lately. So you want to be looking for either this or this to be taken pretty much on Friday, right? So the area is doesn't mean you cannot take it out before, by the way, but that's where you're looking for a pivot at least. Obviously, it can happen before. But it is a very interesting point for a hedge, though, I must say, or at least for a long, right? Because let's not forget, as I said, I took this short because A, Tuesday has been killing it, B, it has very high confluence, and C, it has a very good risk to reward ratio. So I didn't really see the reason to not take it. But that doesn't mean I'm negating the statistics that Wednesday are still, purely from a statistical standpoint, Wednesdays are still, or Mondays, sorry, Mondays are still high probability, right? So this would actually be an interesting area to look for longs because we have the golden pocket, we have this right there. It's pretty beautiful. But I wouldn't take it now, but it's something definitely an area worth looking at. This one would be a hedge for the short, right? So I would be looking to target this then. It's also not a weird idea. So let's see how that plays out. And there's still like I said, there's many more things coming. This 4 hour data I think is going to be really cool. It's really nice because the Discord's starting to come together with some data-driven people, so everyone has good ideas. Basically, look for people with good ideas so I can build it. So it's going to be very valuable to see when in the 4 hour candles stuff is being built. I can even check. I can just show you live, and this is still under development, right? That's why it's looking bad. But if I take this as a filter, it's going to be very interesting to see because what I can start doing is that I can start filtering 4 hour candles on based on which 4 hour candle of the day it is, right? You have 6 4 hour candles in a day, obviously 24 divided by 4 is 6. And I could start filtering it like this. I don't know if it's going to work like, oh yeah, I figured it's not going to work like this at the moment because I need to set up a relationship. I'm still building it, so I'm doing it early. But basically, I can start filtering on, there's this is all 4 hour candles in the day combined. But what I can start doing is that I can look at individual 4 hour candles. So the first 4 hour candle of the day, hour 12 UTC to hour 4, and so on and so on and so on. Second 4 hour candle of the day, last 4 hour candle of the day. It'll be interesting to see if there's any difference in there. And then 1 hour candles, we're going to do the same. We're going to look at the 5 minutes. We're going to get a statistic to see how often New York sessions take out London sessions, stuff like that, to give us, probabilistic edges, hard quantifiable edges that we can use to beat the markets. And for anyone who is still here, last minute, I will give you one more parting gift before I shut off as a thank you for joining so long because I know it's heavy stuff to talk about. I'm also trying to find my way to normally in my streams people already went through the video course, so it's easy to talk about. Now I kind of have to find my way in how to talk about it in a more uh, in a version that is understandable for people who haven't gone through the video course. But the more I plan on doing this stream every week, also just normal TA and then going over some statistics in a more basic way. But I'm learning this as well to do it like that. So thank you for staying so long. I just want to show you just this beauty of a statistics. Look at this beauty of statistics. This is Solana. On Monday, 62% of the time, 62%. Like people are always looking for an 80% setup, right? But 62% is already a very good probability, guys. Lately, it's been happening a little bit less. Let me actually get the data here, but still quite a bit. Still quite a bit. So this is already very good probability. Very good. You already know that on Monday, there's a 60% probability to put in the first pivot of the week for Solana, right? This is the highest I've seen. Not only that, you know, this shows how often in the week, or like if, so this shows when in the week the weekly P1 is put in this case Monday. And if I click this, it's showing me how from all these P1s on Monday, which session puts them in, right? So in this case, I see that 53% of the time Asia session puts it in. I can drill down even deeper. Here I go, Asia session. I can see that 50% of the time it gets put in an Asia session, it is putting during the first trading hour. So basically what you can do, and I have one guy in my group doing this, shout out to OmniScience, is just wait for the open, the weekly open. Let me just, oh yeah, I prolonged this one using the dashboard as well, but maybe I can save that one from the next time. Already been going on for a while, and I think I've already exploded your heads. I mean, I'm exploding my own, so let's take the weekly and just show it. I love Solana. It's really nice to trade. So weekly opens, these are all weekly opens that I'm putting in now. So here, let's just see how often it got put in on Monday. Monday, let's make that one red, closing of Monday. Closing of Monday, whoop. All right, it's gonna take too long. I'm just gonna show you quickly like this. So here, Monday, right, start of the week, Monday puts it in. Here, not, doesn't always happen. Here, look at that. Monday, start of the trading week. Here, Monday, start of the trading week, first pivot of the day. This case, not. I think it's Tuesday. Doesn't happen all the time, like I said. This case, also not. And where is the end of the trading week? Oh. All right, so let's check. Started very well. Tuesday, actually, Monday, start of it. Here, Monday, start of it. Here, Monday, start of it. Here, not. It was Wednesday. Here, start of it. Here, start of it. Start of the week. Here, just on Tuesday. Here, it just got taken out. But sometimes this is also dependent on the exchange. And lately, it has actually been happening a bit less. But this one's interesting because right now you have the Monday right here. But again, I don't like, you can see what I was talking about earlier. I like these kind of lows more because you go into them, right? So this is like, you just go up and then you put in the low here in between that up move. Here you can see the times where you do put it in at the start of the week. is you go down, bam, put it in, right? You go down, bam, put it in. You go down, bam, put it in. You go down, bam, put it in. You go up, bam, put it in. So it's more the start of the going into the weekly open. You want to see it going into the opposite direction, more or less. So this actually was a nice move, but then we took it out later in the week. So I guess for Solana, it's actually the same true. Didn't happen for 3 weeks. So 1, 2, 3. Ah, there you go. So this one was 1. Yeah, there you go. Yeah, it was lower. Yeah, so that's why I was saying, I said this one was actually a nice one. And there you go. So you went into that, right? You went into that, bam. So if you would see this on a Monday open, knowing that there's a high probability, 60%, and almost always in Asia on hour 0, or 50% of the time, not almost always. And that's a very interesting trade to look at. So I have a guy in my group, I think he took that, yeah, he took this one, just waited for the open, then have a point of interest there, saw the reaction, and then just longed it. So I really like this statistic, but this one I don't like this low as much because it's not a clear liquidity run. All right, let me check the chat one more time. Billy Buck really shows you worked a lot on this. Looks awesome. Should be very proud of the work you put in this. Thank you, man. I really appreciate that. I really appreciate that, dude. And yeah, it was quite some work, but it's coming together. It is coming together nicely. So yeah, I'm gonna be doing these weekly to answer some questions. I know it was quite a lot of information to get through, and not just answer questions. I'm just going to do some live TA. I know I've been not been doing that for a while. I've used to do it a lot in Discords and stuff, but it's just been a lot of work putting this all together. So I didn't have any time, but I want to do this now weekly to kind of show you guys how I trade with this, and yeah, maybe you can learn something from it. White magnets work better. Yeah, well, I always use white magnets. I only use red magnets in case of emergency when I'm really desperate. What we're gonna do now? Up, down, or consolidated? That is the question. There he is, the man, the sole trader. You give me the answer in the Discord, my friend. All right, guys. If there's no further questions, I'm gonna shut the stream. Take chill for the rest of the evening. I'm gonna thank you for looking, and I'll start posting the schedule on my Twitter for these weekly live streams, and I'll announce them a little bit further ahead. So, all right, guys, thank you a lot. Thank you for joining. And if you're looking this back later on, then thank you as well. If any questions, let me know. Just hit me up on Discord or Twitter or whatever. I'll respond. All right, guys, have a good evening, good afternoon, good morning, depending on where you are, and see you.